Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording Saturday morning, July 26th at 11 a.m. East Coast time. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry?
Doing good, doing good.
How can you believe that it's July 26th?
And
July
the whole
July's
whole year's
done.
been like that. Every month I'm in the
Holy
same state.
moly, man. I know, but it feels like we're rolling downhill, like it's going faster and faster, you know?
Yeah, well, second half of the year, let's see how we can handle it.
Yeah, well, let's see how it goes. The
Mhm.
the key theme today that we're going to talk about is risk management, right? We always mention it, we always keep it in the background, but we're really going to bring it to the forefront because the market has made a decision and it's a bullish one, and we're going to review that. But the key always, whether you're at the bottom or at the top, is risk management, and we really want to focus on it when we're at the top because it's a lot more pain falling from the roof than it is from, your porch stoop. So let's dive in. I see you got the S&P cash up here. Let's see what you see and see what we go from here.
Yeah, well, it looks very positive from here, but you know how charts are. So let's take a very close look because you'll be surprised at what some of the stuff that's showing up.
Yeah.
It's just when everybody just gives it up and say it's bullish, that's when it shows up. So we have to be really careful.
And we're hitting
And
that phase for
yep.
sure.
So last week we left off with this, 180 degrees. We had Friday. We had this little red bar right there that sat on top, and we talked about that. We said, look, we cleared the level, so it looks bullish. If we can hold 6280, we ought to move higher. And sure enough, we held it. You can see on Tuesday that pullback came right to the line. And from there, we reversed that and rest is history, as they say, and up right into Friday. And that's that. As far as overall support goes, now it shifts back down to 6280, right? This is the big daily support level. Obviously holding above any of this, any kind of a pullback that holds above, let's 6320 area is in good shape because we've had a lot of consolidation there. So that's just the gist of it. Where are we going with all of this? Okay, we'll take a look at that in just 2 seconds. Let's take a quick look at the front month. This is the ES. Pretty much the same scenario. We cleared the 180-degree level and 6328, and we're moving higher. So that's that. Just like Ben said, a decision was made and we broke out, retest, and moving higher. Great. So where are we going? Well, technically we could be going up into 65, 70 territory. But before we get too far ahead, I want to show you guys a couple of things that we need to be aware of. And this is part of I consider this to be part of the, risk management takes a little bit of situational awareness, right? And this, I would file this under that and under situational awareness. Where we're really happy about the breakout, we also want to look at where things are reaching. So here we're looking at the market from the October 22 low. And if you take a look at where we are and you go across this line to see what the degree is, that's 360 degrees. That's one cycle up from the low. And this is a critical level, as critical as a 180 level, which would be half of that. And you can see how that was also a critical level. We broke out, retested, ran up, retested. And even when the tariff crash came in, that's pretty much where it held. You can see that anything beyond that was momentum, and all the opens and closes were above that. So, so just as important would be this 360. And I would be really surprised if we just slice right through it and just continue to go on, because this is a pretty active
It's a big
square.
level,
Yeah,
big
it's
level.
only because it's a big level. I mean, 360s you don't hit every other day. Well, 90s you don't hit every other day, and 360 just even more rare. And when it
Hmm.
does show up, we want to pay attention to it because we don't want to be caught on the blind side, right? And so we want to watch that. Yes, this all looks very good, just as it did here when we broke out of, the last consolidation. It was fine. But now this is a little bit, we want to watch that closely. Very close, matter of
Look,
fact.
yeah,
Yeah,
it's a really good alternative look, because remember the whole thing did start in October of 22.
yeah. This leg anyway. Oh, I should give you guys a level for that. So the level of the cash would be 36.86. Let me put it up here. 36.80. Where am I getting these numbers? 63.86.
Hmm.
Funny. All right. So that's the level to watch, you guys. Just keep an eye on it. We'll see what happens. Any reversal that takes out Friday's low going into Monday, Tuesday, you want to be really aware of it. And when we do get a reversal, if we come back down to 62.80, like we talked about earlier, and we hold it, we stabilize above that. And that would, to me, that would be a retest of the breakout level. And then we can move higher. But for now, we really want to watch that 36.86, see if we can settle above that or not. If we don't, especially if we get some kind of a pattern, we get reversal, one bar reversal, or even a two bar, at the last 2 days lows would not fit well because we have that price level coming in. Timing, we have 108 degrees from the low, April low. That's not too bad. I don't have a whole lot more happening up here. So let's see. That's what makes me think it's going to be more of a correction than some kind of a big reversal. Let me check one other thing here. Yeah. So that's how I would put this together. 63.86. This is for the cash, SPX. And if we can hold above 62.80, I think it'll be stable and then continue to move higher. If we lose 62.80, somehow start to consolidate, we start breaking through this level and start making lower highs, obviously, then we have something bigger happening. But that's how I would frame this whole thing. And so the risk, the risky part is obviously risk comes in 162.80 gets taken out. That's sort of the stabilizing level, stable level for now. And the level for the futures market would be 63.28. Well, here's a continuation of the futures. So 6,400 is pretty much where the high came in. We have 720 in time. This is from the October 22 low as well. And this is not calendar day, this is trading day. We have a 720 by 360, and that's pretty close. One day off is not a big deal. Let's just see. Let's watch it. I just want to watch this only because we're hitting some of these other numbers from the cash. All right, let's move on to the Dow futures. We're doing pretty well, holding right at this 50% level. Not a whole lot more to report. We held this this sort of the support, used to be resistance zone, now it's a support zone. We held it pretty well. Let me draw this out a little bit further. Idea being, this is a big support level, used to be resistant, now it's support. And the fact that if we can manage to hold above it, great, we have more upside. If for some reason we get stuck under it, then, the market's going to be weaker and it's going to be to the downside. And where's the proof of that? Well, here we got stuck, that was one correction. We had a little expanding triangle that got stuck below, to the downside. So, level's been pretty good in showing us the basic balance, right? So that's that. Let's take a quick look at the weekly charts. Here's the futures, weekly coming from the 2020 low, which is also a pretty decent low. So we drew up this resistant level once we broke out of this big old ABCD. We thought that would be a decent high. Well, it was. Obviously, the whole tariff low thing started at that high. Exactly at the 50% level. And see how we stalled out. Remember all that December, January stuff. So once we take that out, the only other logical pace is going up into 6,400, 6,500. So this is the zone. And at the time, I just marked the zone because both 65.28, they say 65.30. So 60, I mean, it's a big level. It's a weekly chart, right? So 6,400 to 6,530 seems to be the zone. And now we're kind of tuning into exactly where that is because we're looking at the daily charts and we got some levels to work with here. But basis the weekly, this is what we want to look at. And weekly support obviously is way down here around the 6160, 6160 level. I mean, this is just structural support and the square just happens to be there. So I would say that's where the big support is. But let's see where this ends up being. I mean, people tend to be most bullish as we get into, as we're getting closer to some kind of a correction. So we want to watch this very closely going into here, going up into this high next week. Well, because of the levels that we just talked about, I think it's important to keep those in mind. Here's the S&P weekly. You can see we reached pretty much 180 degrees from the low, October 22 low, beautifully. Everything looks very nice. But that's basically the high on Friday, or the close is right on the level. No, Ben, you talk about decision points. I mean, look at that. It can't get any more on the line than that. And that's
So many
180.
times.
Yeah.
So many times we see that.
Mm-hmm. We want to keep an eye on that. And I want to just to, we already talked about the weekly, but I want to look at it from the cash weekly. We didn't really look at. Well, 360 is just right ahead. That would be around 64, well, 45, let's say 64.50. The S&P like these round numbers. There you go. I think that's sort of what we're dealing with. We have, we're very close to these levels. Some are at the level, some very, very close. And it doesn't have to necessarily get there. We're close enough, how they say, close enough for government business. So this is close enough in that sense because we were here, back in 21, we were within 1/8 of the square and we turned 1/8 of the square and we turned. So both of those times we had the daily chart showing us just, the high that came in was fine, but on the weekly it was just a 1/8 off, right? So here we're actually more than a 16th. It's pretty tight. Anyway, you guys have the levels now, and this is why a little bit of a warning and a little bit of a, taking a peek at risk here when everybody's abandoned it completely, right? So when risk is far away, we want to kind of take a look around and see what's happening. And I think this is
No question.
right, these things that we want to really keep an eye on. All right, so that's it for the S&P. Do you have anything to add? I know you're going to cover the NASDAQ. I don't know if you want to add anything here or not.
No, that's just
We're
great
good.
looks and
Mhm.
a good reason why the theme is risk management this week.
Yes. And you guys know the levels, you know where the reversal should come. If you understand basically the levels and the patterns, we should be okay. Let's move on to bonds. Not a whole lot happening. We're holding. Really couldn't break through the high that was made this week. So it's still, in between consolidating. There's not much, a whole lot to do here, other than to notice that we're making lower highs. That's not exactly bullish, but that's something to keep an eye on. Let's take a look at the weekly bonds. Well, here we can see how this 111.10 is kind of holding. That's the square 9 level, 135 degrees down from the high. We're really banging against that at the 90. So we're trapped in the 90-degree level. The only time we broke out, we went up to the 45. So you can see it's pretty well measured. it's doing okay. Now, when we get to our normal weekly chart, we held below 114. Again, this is the key. If this is starting a new leg, taking out this week's low would not be pretty. So keep an eye on that. As long as we're below 114, it's a little bit on the softer side until we get on top. Then we can, at least start to contemplate the long side. And if we do, we have an ABCD working the upside. And if we go down, we have an ABCD potentially working here. But this big ABCD makes more sense. It's probably going to be a little bit Well, let me see. Yeah, it's in the same area. Anyway, we'll
They're
see. For now,
it
yeah, the
feels like
wait.
the bonds are waiting for something, doesn't it?
Yeah, yeah. I mean, this has been a long wait since
Yeah.
23, right?
Yep.
We've been hanging around this 114, and now it's winding up. You know, it's sort of in the winding up phase. We're very tight. Wow. Anyway, what happens?
Feels like it's going to be a release soon.
Yeah, yeah. There's going to
Yep.
be one. It's just a matter of we'll get the timing as we get there. But
When and what's the excuse? That's all we're waiting for.
yeah, exactly. I mean, we had price here, but we really didn't have the kind of a move up. In that sense, we had a low, we have a higher low, but we also have a bunch of lower highs, which gives us a little bit of a triangle, and that's the wind up, right? So we're winding into this, and inside the triangle, it's a little bit hard to get timing because it's just nasty. So we'll go with the original timing the low that we got here, which is a false break against this low, which was I think a more legitimate low, meaning the counts and everything were there. So we're just working inside that swing. Uh, let's move on to crude. Well, if there's anything more boring than bonds right now, it's probably crude. But not a whole lot I can add. But as you guys can see, we're holding trend lines, we're holding the levels. Structure looks okay, meaning structural support here is working so far. And we'll just wait. Not much to do. We know the lows came in. We know we got the flush that we were looking for. So long as we're idling above that, I think we can sort of hit the gas anytime. So let's just
Barry,
watch it.
one quick thing for people that are, practicing and using the squares on their own, you can see this is a really good vibration. Look at all that action
Hmm.
around that 60.
Yep. Yeah, exactly.
I mean, over a long period of time too, back in last September, it held
Hmm.
support there.
Hmm. And we've had the
So,
60 on here since before that. So
yeah,
it's been,
exactly. No, it's a really, really good vibration that's
hmm,
capturing this market.
yeah. And it's caught all the corners, caught this one here.
Yep. Yep.
Let's see. It's stuck in the middle for now. Take a look at the weekly. Well, here's a big circle chart, expecting some kind of a break, actually break to the upside, following. And if it doesn't happen, well, this is what we get, continuous sideways. And that's kind of what we've had. But the 64, you can see how important the 64 is. We've held above that for about a month now. And I mean, little peak here below here and there is okay, but you can see that's a really, really important level going back 10 years. So, well, that's not much to do when they're sideways. Here's it weekly, pretty much the same story. We did go lower, but right, it's still in the range, it's still above the structural support. Let's move on to gold. Well, it's pretty much the same story for the last couple of months. We're consolidating, we're holding, the bracket is basically 32.42, 34.30, and now we're starting to form a triangle. And Ben, you mentioned, it could, if you ignore the spike here, we could be doing a head and shoulders, and that's possible. 33, 38 is sort of the balance point. If we can be above it and consolidate, making higher lows and see if we can break to the upside. Otherwise, we're going to have to go on with this consolidation until one of the sides gives out, and the square levels will be 32.42 for the downside. But you can see
And
we're
you know what,
holding.
Barry?
Mhm.
Maybe that head and shoulders gives like a fake out flush, you know?
That could be. I think metals are ready to correct. When we start getting into the silver and the copper, you guys will see that. So yeah, it's
Hmm.
possible that we correct off of that, maybe get down to 30.70 or so,
Right,
where anybody that missed out on gold could buy it. So
right, right. But it'll look
because here it
scary
got,
and it'll freak
mhm,
people out, you know what I mean? And then
yeah,
they make the next rip higher.
and gold here. I mean, everybody was bullish here. I remember people that didn't even talk about trading, talking about buying gold. So it was, we reached peak gold here, at least for a little bit, and you can see after that, that's when we started consolidating. So yeah, so those are the levels. We can really get into these when you start moving again. So now we're gonna watch it happen, how it unfolds. Weekly, a little bit better, meaning 32.94 is really the cutoff level. It's 208 degrees up. It's on a 52 square. And the peak came in exactly at the 50% level, 35.08. Everything looks good. It's just, I think some kind of a consolidation is probably healthy after almost a vertical move up. Yeah, it's just get time pass through. Metals have been good. You can only get what you can get, right? Can't squeeze too much. Here's silver coming off the September 22 low again, and kind of like the S&P. Look where we're hitting 360 up from that low, 360 at $40, and we're pretty much where silver last week. So there you go. I think we have a high in place for now. Some kind of a correction is probably to be expected. And if we take out, I mean, if we can hold above 37.70, silver and the metals would be extremely bullish. And even if we take it out, get down into the quarter level, 30 above 36 in good shape, above 35.50 is in great shape. So you can look at these as, the higher we consolidate, the stronger the market is. That kind of a frame. But
To add more,
35.50,
I was going to say to add more evidence, Joe, to your Barry, to your analysis. If you go from the May 1 low, you have 60 by 60 at the high.
That's a high. Okay, there you go. It's always good to get
Yep.
something off the last swing, to confirm
Mm,
that. So if that's 60, but yeah, so that's very good. Plus a 360 from a longer term low.
hmm
We do have price and time there. So yeah, so that's silver. So that's the deal. Wait till you guys see the weekly. There you go. We're up 90 degrees from the low. This is 22 low again. And we almost tapped the upper part of the channel. I think if I connect these properly, it probably did hit I left a little gap here when I do the channel. It's a little sloppy. There you go. Right. Looks pretty good. So I think we're good on silver. Just like you said, we have that daily square. We have a weekly huge level that it reached, matching the 360 off the daily. So I think time to back off a little bit on silver. So why take on undue risk?
too many squares popping up on that one. I got monthly,
Yeah, yeah,
weekly,
yeah.
daily.
And we've
So
been talking about $40 silver for a long time. And
yeah.
and
And it's not that we're negative on it either. I do think longer term it's going to go higher and it's bullish. It's just a lot of things are firing off saying, okay, we're going to see a correction here. Let's see how the correction plays out.
exactly. And if we're talking about risk, well, you know, this is why.
Yeah, that's right. That's
And
right.
copper, moving on to copper daily, we're up 120 degrees. This square is working pretty well. 180 by 120 by 180, setting up this in a couple of days. So I think we're close enough, probably squared out. And again, copper can correct all the way down to 540. Copper's in pretty good shape. If you can consolidate above 565, then you guys know it's even stronger. So I think I would watch those two levels, basically daily. So 565, 540 would be the two levels. Quick look at the weekly. So weekly, we hit the 50% of the square coming off the 2020 low, and that's 593 right there. Hit it perfectly. And, when these hit, you got to know when to back off. So, if you got profits, that will be the place to take them. And you saw last time what happened when we hit square exactly. We corrected the entire square and then some. You want to watch those. And the first time we hit the 50%, corrected about half a square, maybe three quarters. So there you go.
And
Another heads up.
yeah, a lot like silver. It has a daily, weekly, monthly squares. So
Okay.
uh,
Okay.
it's time to manage risk if you're long.
hmm On a number, what's interesting is towards the end of July, everything is hitting these key levels. And it's not like just the metals, just it's indices and
It it's very, very, very telling.
okay. So we're on to the dollar. We got the higher low, 97 held, 50% held. Now, if this is, if if we can confirm this low, which I think is a decent low. And this is a higher low, then I think we're off to the races. And if we take this low out by any means, then we got to back off and see if we can, what happens at this level. Are we going to make a false break here, double bottom kind of a thing, and then go, or are we going to fail? If we fail, we can fail badly. So let's see. I think it's important to hold this if the dollar has to be remain bullish. Um, it's a good level, really good level, going back to early 20s. So anyway, that's a level to watch. We got the pullback, so everything looks okay. Here's a weekly, and this is why we called the low in the dollar a couple of weeks back, a few weeks back. We had this 144 by 144 basis weekly. It's a big deal, and so yeah, sure, pullback is normal. We talked about it last week. As long as we hold the low, let it get geared up and stabilize, and we'll see how the next move goes. Euro, pretty much the same story. We made a lower high and reversed. I think the 1650, if we can take that out, that would kind of confirm the whole thing. So let's wait and watch for that.
Stronger dollar would sure fit with weaker metals.
Right? Yeah. So
Hmm.
seems to work out on this cycle. Weekly, well, the 144 timing is here on the weekly euro. Again, if we reverse and basis the weekly, at least we take out last week's low, then I think we can confirm the high, at least early confirmation, right? So that's that. Everything looks good. Let's cover Bitcoin. Bitcoin, I added this a couple of weeks ago. The week I added, I called out a high here because we have resistance at 120, 123.72 is 180 degrees up from the April low. And we had timing, we had 90 degrees up. So that's kind of a no-brainer. And no-brainer maybe unless it settles above, right? So anyway, looks like, and last week I said, look, it really looks like we're going to break to the downside. And so we got a little bit of a break. How much more, I'm not sure, but I think we can get all the way down to 109 to have some real support. You can see here we came down, we checked the support here at the 90, which also happened to have some structural support. So the structural support area here really, it starts around 111 and all the way down to 109. So 109 to 111 seems like a decent support level if we're going to continue to go higher. So we'll have to watch this closely. But there's your Bitcoin. And Hang Seng looks good. 26,240 is the next level of resistance. We cleared the 144 degree level, which was a big deal, coming off the November lows from 22, which we also called out. Anyway, looks good. Well, natural gas, not much. We've been sideways, so I guess we'll continue to be, be that way for a while. It looks like if we can do it for 6 months, why not 9 months? Anyway, 298 is support. Let's see, we haven't really wound up into anything big other than when we wound up, back in February of 2024. We called
Yeah,
out
it
that
just
these
feels
lows.
like it's drifting. It's just drifting for now.
Yeah, yeah, and it's holding, and drifting at a good level. Everything looks
Hmm.
okay. And what else do we have here? Bitcoin. I don't have a weekly for Bitcoin. I don't know if you guys need one. Let me know if you guys do. And if you guys like our work, please hit the likes and alerts and subscribe. And also comment if you guys want to see anything else or if you have anything to add to our analysis and our how we're looking at the market. All
Like,
right.
we
Mhm.
definitely respond to your requests.
At some point, maybe not the exact the next week, but we
Right.
will.
We do get to it for sure.
All right. Let me put it back to you. And what are you covering today? We got.
We've got sugar, cocoa, coffee. So the softs are firing off. We'll talk about those,
Mhm.
review those in depth. Corn and soybeans are trying to put in higher lows. So we're not going to talk about them yet. Let's see the coming week. We'll see if we get higher lows on those, and then we can highlight them as the setups will be there. And
Mhm.
we'll also even we'll look at the monthly circle on crude since we're coming to the end of the month and see what that's telling us in addition to the information we got, the important levels you were highlighting in crude oil. The circle was again talking to us.
Hmm.
So we'll look at that.
Great.
We'll look at NQs and we'll look at Bitcoin.
All right, let's do that. Well, Ben, we talked about that 2220 for a couple of weeks.
Yes, we did.
See what happened?
And you can see test, 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 go. As we discussed, it's level to level, right? So 22,820 has now been cleared and held, and they're pushing and pushing to this, 24,263 is the half square. I was checking out some timing, Barry, too.
Mhm.
From the April 7th low, we go 90 August 11th, which if it continued till until then, that would be a hell of a run. Um, High to highs, I was checking. We got one for 120 that gets us to August 5th, and one for 180 that would get us all the way out to August 25th. I bet the 144 is right in here too. No, it's further back. That's why I had the 180. So anyway, there's early August timing. There's this push that we're getting, which is, as you showed off of the S&P and the futures, there's a lot of risk. There's a good run possible, but there's a lot of risk here. Now let me show you, like you, I was playing around with other locations of squares and other
Mhm.
squares to look at. And I said, what about, this run, this major run here that we're getting, this sort of vertical run started on the August 7th, April 7th low.
Hmm.
And I said, let's see what we get from there. Look what happens when you put a 72 on.
Right.
Three
Same here.
squares up at resistance.
Hmm.
And we just, this past week hit the timing where, we had 72 in time. So
Hmm.
a lot like the things that you showed, we were at target, we're hitting resistance here. If we can't clear it, and let me give you the level so you know it, 23,420. If this coming week we don't clear it, this could be a high, which causes a decent correction, and a more meaningful correction. Now, if we go back to the original square, the one that we're using to guide this so far,
Hmm.
it's a different picture, right? It looks like it's up, up and away.
Right.
So this is where the sort of theme of the week of, you know, uh, risk management comes into play. Right? We
Hmm.
while we have it looks like an all clear, what digging deeper and looking from other perspectives, there are possibilities that we're making a high in here, and you can't just throw money at it and expect to make money. So we got to be careful. Anything you want to add here on the daily?
Well, I mean, this timing is everything. I think now that 2280 is decent support and even a quarter square down after that. So we'll
Hmm.
have to just monitor price action and see what we come up with.
Right. If this 72 that I put in from April 7th low does
Hmm.
come into play, as Barry said, we really watch 22,820 on a pullback. Because if it holds, then we have the odds shift dramatically in favor of launching from here, to the next, 24,200 area. If we fail there, then we got to reassess.
Hmm.
So that's how we're going to try and manage the risk with this high flying indices here. Let's take a look at the weekly. Here's your weekly. Your weekly shows again, pushing, pushing, and we could get to this 24,000 area, without too much difficulty based on a weekly. Now, the thing to notice is we've hit the target of 7/8 and haven't really cleared the 7/8 line yet. So weekly basis, let's watch and see, if we can get this next week's bar to clear that, then we have even more confidence that it's going to keep pushing.
Hmm.
One of the interesting things here, we did low to high 19 weeks with this run here
Right.
off of the low in August of 2024 into that, that high of December. And in a couple of weeks, we're going to be at 18. So over the week of August 16th, we're going to be at 18. And we did top out. You see, we had a pretty good high there, right? Because we got that tariff low off of that. So that's something else to consider timing wise next couple of weeks, potentially.
Right.
How's your weekly? Let's take a quick look at the monthly. Monthly's also pushing. This one's off of the O2 low, the .com low. This is a square of 45 or 90, and it gets us to 180 is 24,036.
Mhm.
Key monthly basis is this 21,100. Got to hold that on any pullback. I was looking at some timing here and seeing
Mhm.
if there was anything interesting. 33 months is this month from the low in 2022, which sort of kicked off this whole leg. So that's an interesting number. And as well as 44 months from the
From the
high in
high.
21.
Mhm.
Yeah. So those are decent numbers, both right on this month of July. So again, it's again with the timing and the different views, going from different vantage points, it's just time to manage risk. It's not time to get bearish, but it's time to manage risk, right? Watch levels really closely because if levels get violated, that's when you start getting big drawdowns.
Mhm.
Anything you want to add on NQs? That's all I got on NQs for now.
No, that's a good analysis. Fits in with everything
Okay.
else.
Yeah. Yeah.
Couple of yellow flags, but nothing to worry about.
As long as we're above the right levels, nothing to
Exactly.
worry about.
Exactly. I was just going to say.
Yeah.
Hmm.
All right, let's take a look at Bitcoin because I have a interesting couple interesting views here as well. The the main level we've been looking at now. First it was 108 and then now it's this 119. Just call it 120 for rounding purposes. And right now we're stuck under it. So from a just a purely the Gann squares that have been working quite well with this vibration, purely from there, we're looking at, until we can get above and clear this 120 area, we're going to be, under pressure to come back, which fits with your, calling the high last week, come back and test this 108 area.
Hmm.
So, until that happens, just figure Bitcoin's probably going to be under a little pressure until we can clear that 120. I was looking for timing here. Low to high here from the March low to the May high was 45 calendar days. If we take 45 calendar days here, it gets us to August 7th. So that's a timing to consider potentially. But again, as long as we're the key level right now is this 119,800. Got to clear that to have the upside keep going. And if we do, then it's 131 and
Hmm.
change. That's that. Let's look at the weekly because here's where I have some interesting timing that's coming up. So I set this off of the low in November of 2022, right? Bitcoin low there. If we look at timing, Barry, we're coming up on 144 weeks from that low, and that's the week of August 11th. So that's a pretty important timing. And if you can look at what happened at the 72, right? We made a high and then had a pretty decent correction, a half square correction off of this timing. So I'm very interested to see what we get when we get this next timing coming in at 144.
Hmm.
Until then, we're basically trapped between the 107 and the 126.
Hmm.
But this chart, I really want you to focus on the timing, which is this 144 line here. And then we'll take a quick look at the monthly.
Boy.
And I
Hmm.
drew in this ABCD and said, what if we're doing this, right? What if we're just going to do an ABCD up here? And that gets us, up above this half square, which right now, if we had, we get the close this week that's above here, and that will help us clear 111. Your target does become 130. So let's see if this plays out. Be a nice,
Hmm.
nice move higher. So we
Yeah.
have we have timing coming up weekly basis. This 144. That's the week of August 11th. We really want to watch that because this vibration here has been pretty good. Even the half squares gave you some timing. Had timing here, timing here, timing here. Here's the next one's coming up. So we may see some interesting price action here around this high. It could push up into maybe go up to this 126 square out here and then get a decent correction.
Right. Right.
So we'll watch and see. Anything else you want to add on the Bitcoin?
No, we're good.
All right, let's shift over to the commodities. I told you about corn and soybeans, previously that if we make higher lows and get some reversals in this coming week, we'll have them on the show because that means we'll have that low that's squared out and we'll have a higher low in place on the daily and we can start looking to trade those higher. But
Hmm.
let's go to this show's really going to be all about the softs because it's the softs that are firming up, which is a bit of a paradox, but there you go. Let's start off with sugar.
Hmm.
We called out the low here in sugar, saying we had a nice square. We were on a half square. We got a decent move up. We had the pullback this week, and now we got a daily reversal, right? We got this bar that reversed here on the daily. It's looking like we have that higher low.
Hmm.
Let's see how price action happens on Monday, Tuesday. But as long as we can push up and get going, it'll start that trend we want to see, which is higher lows, and then we take out this high, we got a higher high on a daily basis. So pullback, reversal, sugar's doing what it should be doing if it is in fact bullish. Let's take a look at the weekly. Here's your weekly.
Hmm.
So we did pull back off after this first weekly bar up that we had last week. This past 2 weeks ago, this past week we reversed. So let's see if we can hold here and also get the weekly going. We had that one up bar and now we have one down bar. So this next coming week's going to tell us a lot.
Right.
And then let's take a quick look at the monthly as we're nearing the end of the month here. The monthly bar made a low, but as you can see, we're back sort of in the range of the previous month's bar. So let's sort of see where we close there. Key thing on the monthly basis is we got to get above 1784. And monthly, weekly don't. It's too early to get a great read from them. It's all on the
Hmm.
daily right now and making sure we put in this higher low.
Right.
Anything you want to add here on sugar?
No, you're right. We got to watch the daily, see how it turns out.
Yeah,
Looks good. It's early enough, you know.
it's early,
So
but it's in commodities. The earlier you can get enough evidence to get in, the better because the moves are crazy when they go.
exactly.
All right, let's go to the next one. Cocoa.
Hmm.
So we talked about cocoa last week as being, that this came down, tested this support, all this support in here in the, on this half square, and then we got a one. I think we had only a 1 bar reversal last week, and now look what we did. We pushed up more. We tapped this full square,
Hmm.
and now we're sort of holding here. The next really key thing is if we can get on top of this, because then it'll start that ascension that we want to see, sort of the stairs higher. And you see how this thing goes when it goes. The pullbacks are very shallow and modest. I mean, look at the moves, Barry, when this thing goes. So we did have some more strength this week, which was good to see off this low. You see how the low was made, and then it was a pretty strong move in the opposite
It's a great
direction.
false break. Hmm.
Yeah, it was a clean out move, right? Cleaning out with
Yep.
this stuff here, with this previous low over here.
Yep.
Now we want to get above 85.91. We get above 85.91 on a daily basis, then we can say, okay, the low looks much better, much more solid, and now we're sitting on top of the next level, and then we can push to 10,000. So it did good work this week. Obviously, more to go to get above the full square. First attempt at it, it tapped it and pulled right back. Look at how they did that too. Went up and tapped it, closed near the low, and then yesterday they opened near the low and closed near the high.
There you
So
go.
the buyers are there. Let's take a look at the weekly. We got a weekly reversal, which is nice, right?
Yep.
Last week was, you could see how early we were when we were talking about it. We got this was the low bar, and now we got a weekly reversal. So we got the close over 8,057. Now we want to see, can we clear that? Can we get a full bar above it? Like this, right? This bar was
Yeah.
straddling it, then it got this bar above it and just pushed. So the main thing to take from this one is we got our weekly reversal,
False
which
break
is a
looks
sign of
good.
strength. It does. This is an even better view of it, right? Clearer view of it. Let's take a look at the monthly. Monthly again, if we can get this a monthly close over 8,200 and then say have August bar clear this, it'll be a
Mhm.
sign that this was a spike low, cleared out the stops, and now we're heading up for the next leg higher. And it could be a lower high. We don't know yet, right? Could be a higher high, could be a lower high, but we know that the risk reward right now is favoring the long side because there's a lot of room, right? We could run all the way up to 11, 12,000, make a lower high, and there's a hell of a lot of profit after buying down in the upper sevens. So that's Coco. Anything else you want to add on the chart?
No, we're right on.
Observations?
No, we're there on time. Everything
Yep.
looks good.
All right, let's go to the next soft. It's interesting that three out of the four softs are on buys, isn't it?
Yeah. Yeah.
So here's the next one we're going to talk about. It's coffee. That's the monthly. Let's start off on the daily. So here's your daily on coffee. What are we looking at here? We had squares at the low.
Hmm.
On the daily, we did 144 by 108. Nice square there, right here at the low. We had a little false break here, as you can see. We made a low, pushed up, cleaned out the low here 2, 3 days, rallied up, higher low, held the half square, and now we've reversed. So remember, we were short this market before.
Hmm.
We came into that low when it squared out and said, hey, this thing's squaring out. We got to see what it looks like once we make the move off the square after the false break. We got the push and now we got the higher low. So to me, it looks like it wants to move and move higher, and we can well define our risk here. Like if we get a close below 290, we know, okay, that's not going to work. That's not good, right? If we clear this 290 on the downside, then that means only this leg ended, not the whole sort of swing. But there's a good chance this swing might have ended, right? And that's what we're looking at playing to the upside here. And the upside may be limited, it may be, to here or here in terms of levels, but the risk reward from here to here and here to here is a lot better. And when you look at it and say, oh, I'm only risking this much because if we close below here and take out that low, I know I'm wrong. But if we go, we're going to go, potentially a full square higher. Let's take a look at the weekly. Here's your weekly. You can see the little false break here from a few weeks ago, Barry, what we did at that low.
Hmm.
Came up and tested the full square. So the next big level and big challenges for us to see is to get a weekly bar that clears this full square, this 305. If we do that, then we know we can push higher still. Give you a look at the monthly. You can see where the monthly came down to. Pretty important support.
Yes, very important.
Right there. Previous highs. So again, the rationale for the long recommendation here and the long shot is we had squares at the low, 144 by 108 on the daily, 144 by 22 on the weekly. It came into structural support, dating back to the late 90s and the early 10s, 2010, 2011. And we've seen reversals, daily reversal. And I think we're working on and we got a weekly reversal as well. So these are all early, but I think early gives you a favorable risk reward when you have squares and you have square outs. You can take these shots and have a pretty good success rate with a risk reward ratio like that. What's your thoughts on the coffee, Barry?
Well, absolutely. Let's watch them. Looks like, we bottomed, and after that, we have a higher low. And I think rest is just down to mechanics. You know?
Yeah. Yep. Okay. Lastly, I wanted to, as we're nearing the end of the month, I wanted to take a look at our crude, our monthly crude circle, and show you how interesting this thing is. So,
Yep.
for if you're new to the program, basically the circles work like resistance points, and often once you get on the curve of the circle, acceleration points, and you can see how it sort of accelerated the decline here, accelerated the uptrend here, and why we watch these things even after they've had these runs is once you break out of the circle, like here's a perfect example. You're going up, you break out of the circle, big move in the opposite direction. Here we've been coming down the circle, and so we're looking to see what happens, what's gonna happen when we break out of the circle. Like, are we going to continue strongly down, or are we going to break out of the circle and potentially get a big move in the opposite direction? Well, guess what? The cliffhanger is still going because look at the bar for the month of July.
Yeah.
It's like it's captured by the circle, right?
Mhm.
And couldn't escape. We thought in June we were going to escape when we were up here near the end of the month because like we were going to be out of the circle. We were going to close above this full square at 71.59, and the move we were thinking, and then the war was happening. Like everything was kind of lining up to where we could see $100 crude. Not so fast, they basically said, and here's and we got
Mhm.
knocked down because the war fizzled out and the sort of that war premium came out and the bears took over and pushed it down. And now this whole month of July, we've been straddling the circle, not getting movement either way, not getting fully stuck in and not getting fully out. The key thing is on Friday, I guess that's the first, right?
Mhm.
The August bar is going to print here, which means one way or another, we either have to go down hard to stay in the circle, or we're going to get out of the circle. If price stays the same, we're basically going to get out of the circle, and then we're going to see, okay, do we get some sort of fast move out of the circle in the opposite direction, which in this case would be higher. So we're going to be watching this with sort of eagle eyes to see what the message is we get coming out of this next bar and this close of the July bar. Any other insights you want to add on the circle, Barry? I know you work with them a lot, and maybe you could share your different perspective on it.
Well, I think the circle combined with what we saw on the daily charts, it's just a matter of waiting for a break, and I think this is pretty clear, especially if you can draw a little trend line connecting those highs.
Yeah,
The
I do see it.
little set there from the 23, yeah, right there.
Yeah, yep, yep.
And I think it's just a matter of waiting for the beginning. And I think this is probably healthier because I've noticed if we go to the halfway point or a little bit lower before the breakout seems to be very strong. I don't know if we'll get there on this circle, but um, certainly anywhere above that flush we got looks good, a healthy spot.
Mm-hmm. It's very interesting.
Yeah,
Very
yeah.
interesting time in the markets. I mean, it's always interesting, but it when you get a lot of these relationships start firing off in different markets. I mean, you showed gold, silver, S&P, the dollar. Um, what other markets were you? Copper that are just all starting to get these, harmonic squares that don't show up every week or every month or every day.
Hmm. Hmm.
It's why the the theme of the show when we were talking beforehand, we said, this is about risk management. Yeah,
Well,
we've got the green,
mhm.
we've got the green light on risk, but you still got to manage. As you always have to manage your risk, but now it's really, really critical to manage risk.
Right. I was going to say not to leave out Bitcoin also hit highs and are pulling back along with the metals.
Yeah. So it's as we've been saying this entire summer, it's the volumes are down and it feels like it's like it really has felt, you and I talked about this, Barry. It felt like it's been holiday trading some days in terms of how
Yeah.
slow things were and how
Hmm.
small the bars were or how little the volatility is. But I think that's masking something bigger that's going on, based upon, what we're seeing under the hood. I mean, would
Hmm.
you agree?
I agree. I agree. Well, anytime it's quiet, you want to, be a little bit awake
Pay
and look around,
attention, right?
pay
Right.
attention. Absolutely. That's
Yeah.
just the basic
So
rules. Basic rule.
As is our normal fare, we'll say, rest up this weekend, even though it's summertime and we're actually moving into the dog days, which is August. There could be fireworks.
Hmm.
There could be. I don't know what it's going to be or how it's going to be, but as I was saying, it feels like it's just waiting for the trigger, and then these quiet markets or calm or boring or however you want to put it, markets are going to do some pretty fantastic things from a volatility standpoint. So we're ready. We hope you guys are ready with the levels we shared, and let's see if we can seize the opportunity. Good job again today, Barry. Great, great different looks on those markets because I think that there's certainly the perspective of if it's just going higher, just buy it. But then, as we said, when you look under the hood, you do get a little different views that make sure you protect yourself is, I guess, the message.
Yeah. Looks like a little correction could be in order. That's what it looks like.
Yep.
Anyway, good job. And you guys have a great week. We'll see you next Friday.
Take care, everybody.
All right. Bye bye.
Bye bye.